Welcome, everybody. This is the first-time homebuyer boot camp. I'm Jacob Stark with 8Z Real Estate here in town, and I have with me the one and only Sean Sadita. Sean, thanks for joining.
Jacob, thank you for having me. Looking forward to talking about first-time homebuyers and home ownership and all the benefits and everything.
Absolutely. It's going to be an exciting one. The past few years, I don't even know how far back you want to go to say this. I mean, it's just been kind of nuts, right? I mean, lots of ups and downs, lots of questions. And what we're hoping to do today is just give you some clarity, because first of all, I mean, you're going to be scared to death to jump into this if you don't have some kind of clarity or knowledge, right? So, it's going to be super important just to just kind of give you some thoughts on what the market's doing, what are rates doing, and how do you make sense of any of that in terms of when is the right time to buy. So let's go ahead and jump in here. We already kind of introduced each other. I mean, Sean, just to give people a little bit more of an idea of who you are in Platte River Mortgage, can you introduce yourself a little bit more?
Absolutely. So my name is Sean Sadita, obviously, and then I opened up Platte River Mortgage. I've been in the business since 2001, and then myself and my partner Scott Martin, we branched off, and in 2005 we opened Platte River. We are a true broker. We are kind of I like to basically say that we're a small boutique firm. So we're very relationship focused. It's myself, Scott, and then there's 4 other loan officers that are with us, and they've been with us for 10 plus years. So, but I think the main difference between us and maybe like a traditional bank or a retail lender is we're very relationship focused. We have, probably 12 to 15 different banks and lenders on the wholesale side that we work with. So we do kind of the shopping for our clients with regard to programs and rates. And I think we have a lot more flexibility rather than just, nothing against the big banks, but obviously, as you know, if you go into a bank, they're going to just give you whatever product they're offering and whatever rate. So we advocate for our clients, and like myself, we've talked about this before, Jacob. I'm kind of a one-man show. I don't have like a team or an assistant or anything. I like work with my clients directly from start to finish and after closing too. So, but like I said, we're just kind of a small and nimble, and been doing this a long time. So that's my sales pitch as far as Platte River.
Yeah, and I just want to reinforce something you said there too, Sean. I don't want to go too long on this, obviously, but you mentioned like shopping for your clients, and I think people are the difference in some of these situations with loan officers. And if you go to one of the big banks or some of these other shops, sometimes you're dealing with someone who can only sell that bank's mortgage products, right? And,
right.
and don't get me wrong, in some cases that might be the best fit for you. But what's nice about what you are as a broker, Sean, is I just think it's so powerful what you said, that you can shop around. And in a lot of cases, you can actually get some of those same products that some of those loan officers can only sell. You have access to those types of products and many more. And so not only are you shopping rates, but product fit and many more things within that. And I know you take a lot of pride in making sure that you're really doing a lot of due diligence on your client's behalf to make sure that it's the right fit.
Exactly. And I think it's everyone's financial goals and situation is going to be different. No one's going to be the same. So that's my job, basically, to explain what programs are available, what makes sense and what doesn't. But it's just so nice to have all those different options and different relationships we have with all these different lenders, over the 24 plus years we've been doing this. So it's great.
So 8Z is it's 8Z because in Colorado every zip code starts with an 8. Are you guys like on the Platte River, or what's the significance of Platte River?
So when we opened up Platte River, we were down in the low, before it was actually considered low high. We were right near the Platte River downtown.
Okay.
And since then, obviously, we moved our office. We're still local. We're still out in Lakewood, but Platte River is just, it's kind of an iconic, river, and it's, so we love it. It was good for us then, and it's been a great ride for us, ever since then. So
you guys were there before it was cool to be there, huh?
What's that?
you guys were there before it was cool to be there.
It was, yeah, exactly. We had to have a map on the back of our business card, just so people knew where we were. Because
Yeah,
before then, it wasn't low high.
yeah.
So, and it's just amazing how much things have changed. As you know, you're a native, so you see how much things have changed over the years and how much it's grown. But yeah, so it's been a good run.
That's for sure. Well, jumping into our agenda here, we're going to do a quick market update, just talking about, I mean, is this a good or bad time, and look at some actual support to those thoughts. Talk through, is the real estate market going to crash? I'm going to tell you why it's not, and could buying before interest rates go down save you money? That sounds ridiculous, but we'll talk a little bit more about that. What steps you really must take before you can buy, and how to put together a home buying plan. So with that, let's jump right in. Again, is now a good or a bad time to buy a home? And you really have to just kind of look at the market. And when people think of the real estate market, they think of home prices and all that. But what really drives home prices are a multitude of things, right? There's lots of things that drive that. But when we really start to look at what are some of those really main indicators that we can look at to see where it's going, jobs, inventory, interest rates, these have a lot to do with where things are going. So let's jump into that a little bit more. Colorado continues to experience very good economic times here, and for some reason it doesn't look like my slide updated. I thought it updated, but anyway, the unemployment rate has really only increased to 3.7% here in Colorado. So it's still a really good job market here. Things have been continuing strong, and probably a lot of people have felt that too. I mean, Sean, I'm sure you're kind of seeing it the same from your side.
Exactly, and I think we're very lucky and fortunate to be where we are because not only do we have great, employment is really good, jobs are really good, but people want to be here. People want to move to Colorado for the lifestyle, for the mountains. We have so much other things to offer, but economically, it's been great too.
No kidding. And what you just mentioned there, people want to be here. I mean, whether you like it or not, the secret's out. Like people want to be in Denver. I've heard people, kind of some of the pundits and everything, talk about Denver's the last coastal city. And what they mean by that is, obviously a lot of our population is kind of, it gets very dense towards the East Coast or West Coast for probably very obvious reasons. Denver is kind of like a coastal city, right? In that the prices have gone way up because people just want to be here. They want to be near the mountains. There's lots of outdoor activities. I mean, plus you've got Sean here. So what more could you possibly want? This slide here, though, we're actually showing the inventory. And again, I apologize that the slides didn't update here, but the inventory is really more of the same here. It's actually tipped up a little bit from where you're seeing it here, but inventory continues to float in the somewhere between like 1.5 to 3 months of inventory. And what that means is that if you didn't add another listing to the market today, this is how many months it would take for us to sell off the inventory that we have. So a nice even balanced market is somewhere in the 5 to 6 months range, which you can see we haven't been there since back in 2011, 2012. Ever since then, we've been floating in that seller's market. And when the financial crisis happened as well, back in 2008, 2009, you had the builders just almost stop production, right? Stop new builds. And that really hurt us in terms of inventory. Because the demand has continued, but we just do not have the supply to keep up. And so, prices just come down to simple economics, right? I mean, supply and demand. And as this chart shows, we just continue to see very high demand, low inventory. And it's not just here in Denver. Like we're hearing stories about that all across the nation. But, here in our neck of the woods, it's that's definitely what we're seeing and feeling. Sean, I mean, you're the pro with interest rates. We know that has something to do with prices and all that stuff. But I think from my side on the real estate side, obviously people get sensitive to rates the higher they go because their payment goes up. But yeah, what more would you say from the interest rate side?
Well, and I agree, and I think this slide's a little bit off too, because unfortunately we have seen rates kind of tick up the last few weeks. So we're closer to maybe around 7% or 7.125. But and I get it. It's people are going to be sensitive to rates, and affordability can be a real issue for a lot of people right now. So, but fortunately, we do have programs and products where you can do a lower down payment. But at the end of the day, and I think you would agree too, Jacob, that it's we're advising our clients that it's not necessarily trying to time the market. It's when you're comfortable with the market and comfortable with making the investment and buying at that time. So, I like to focus on basically two things. And one is your comfort level for a monthly payment, not necessarily what you qualify for. We like to figure out what your comfort level for a payment is and back into a price point. And then also your down payment, what you're comfortable with as far as what you have available for a down payment, and keeping maybe some money in the bank as reserves. But there's a big difference, I think, between if you're buying now, let's say, for example, if you're buying now a $500,000 home, and it's 7%, and 6 months later, if we're anticipating that rates go down, or even a year later and rates go down to 6%, that $500,000 home could be $550,000. So, which the payment, if you work out the numbers, the payment is basically exactly the same, whether you're at 500,000 at 700 or 550 at 6%. But you would agree, I think, that if you can get a house for 500,000, you're a lot better equity position than buying it at 550. So
better equity position, and then assuming that at some point that rates do go down. I know none of us have a crystal ball or anything like that, but if they do, then just more icing on the cake, because you can actually lower that payment.
Exactly, you can lower the payment by probably $250 a month, whereas to get that extra savings of $250 a month, if you bought it at 550, rates have to go down to 5%. So, and I'm not, I don't have a crystal ball, but I think there's a lot more chance of us getting to 6% than 5% anytime soon.
Yeah, that makes sense. So yeah, like we're talking about, you don't have to time the market here. I feel like I feel like it's best said. Something I heard a while back, which was there's never like the perfect time to buy the house, just like there's never the perfect time to have the baby, right?
Exactly. Right.
Or even to get married or whatever. Like, you just do it because that's what you want to do. That's what because these are long term decisions that you're making, right? And I mean, if you are an investor and you're looking at flipping a home and all that, that's a whole other category of home buying. And but for people who are buying their main residence and all that, this is not a few months or probably not even a couple year decision. I know in some cases people get relocated and all that, but we're talking more long term. And this chart's looking at the appreciation we've seen over the last 20 years here in the Denver metro area. And I mean, even in 2008, 2009, and the worst financial crisis of our lifetime, even then the real estate market was extremely resilient in all this, and we can see what it did afterwards in really kind of making up for that time. Even during COVID, things were very strong. A lot of people are asking me, like, well, how much has it gone down over the last year? And the truth is, it has not gone down, folks. I mean, the prices have not gone down. I know that we see price adjustments, price reductions in the listings, but that does not mean that that prices overall have gone down. They've actually continued to increase. The thing is just that the increases have decelerated. Big difference between deceleration and actual decrease in prices.
Exactly, and I think you probably would agree. I think it's more of a healthy market that we're in.
Oh yeah,
going into, hopefully, than what we have seen the last few years, as far as the craziness when interest rates were in the high 2s or low 3s, and that was obviously driving up prices even higher. So, but now I think we're getting kind of into more of a normalized interest rate market and a real estate market as far as appreciation too. So, but it's interesting when you say that, and when you talk to people that I'm going to wait because I'm the market's going to crash, and unfortunately, that's just not going to happen. We're not going to see foreclosures. People have way too much equity in their homes, so it's just it's not going to happen. And then when you think about how much you're paying in rent, or someone could be paying in rent, and how that adds up, even over 2 years, 3 years, if you're paying, and we all know that rent here in Colorado is not cheap. So if you're paying $2,000 a month or $3,000 a month, that's 36,000 a year in money that you could be investing in a house. And I tell all of our clients, I think, and you do the same thing too, Jacob. You're very good about saying, hey, as long as you can get into something, it's not going to be your forever home, but at least you're having that investment and building some equity, and not putting your money to good use, basically.
Yeah. One, I think for a few months there, a lot of people, myself included, thought that we had kind of seen the peak of rental rates and that they were going to start heading down. But then it was either the last or the one before that, the inflation rate came out, and most of the problem with it not going as low as the Fed wants was because of rent.
Yeah.
And so, I mean, it's just too unpredictable. And I know it seems like every municipality out there is trying to figure out like what's the answer. And a lot of things have been tried. A lot of things I would say are the wrong way to go about it. But we won't get into that. Yeah, it's there's no sure things in this life, but what we can look at is historical performance of real estate, and it's solid.
Yep.
So yeah, let's jump into some of these homeownership benefits, Sean. I mean, why don't you dig in? This is a little bit more on the financial side, your lane.
Yeah, absolutely, and it's kind of what I touched on before. But obviously, when you have a mortgage and you have a loan, you are building equity as you pay down your principal balance on your loan. So that's the benefit from owning a home rather than paying rent. You are building and investing into your asset. Also, the tax benefits. Obviously, you have the interest deduction. Everyone's financial situation is going to be a little bit different as far as taxes, but you'll have your interest deduction, property taxes. So there are potential tax benefits from home ownership as well. Then also, like you touched on, Jacob, the appreciation of the home too, which in Colorado has done very well over the last 15, 20 years. So we have that for appreciation as well. And then building your own equity into the house too by buying maybe something that needs a little love and needs a little updating. You can make it as your own, which is the best part about being a homeowner, is you go in and it's yours, right? And you can make updates to your house and improve the value from that standpoint too. So
yeah, I mean, and Sean, I mean, I think this is a good time to even just talk about we've kind of hinted at it here a couple times, but a lot of people kind of wonder, like, is now the right time to buy? And one of the things that we put on the earlier slide is it possible that you could actually save money or just do better financially buying now versus versus waiting? And you hinted at it there, but just to be really direct and blunt with this, I mean, if you buy now, rates are higher. So buying now while rates are higher, how does that save you money? Well, I mean, not knowing where the market's going, but seeing where we are with demand, with supply of housing, and how that's not keeping up, that's just a pretty easy formula for prices to continue to go up. And you mentioned, if you buy a house at a certain price and interest rate now versus waiting till later when the interest rate's lower, but the price is higher, the payment might actually be a wash there. But you're behind, right? You're behind. You've been paying rent that whole time. And who knows, you may have a year like 2022 where the market goes up 17%, and maybe you're even further behind, right? So do you have anything more to add to that in terms of like what you might actually save? And I want to be careful how we say it, obviously, because there's no guarantees, but just based on what the data is showing us.
Yeah, and it's like, from a down payment standpoint, let's just say, for example, on a $500,000 home, and if you're putting down 10%, that's 50,000. Well,
Mhm.
that's the only difference from a down payment standpoint. If you waited potentially, and now that home is 550, and you're doing 10% down, it's 50,500. It's $500 more from a down payment, which is not a big difference. But and the payment between 7% and 6% between those two are basically the same amount. Um, but what you're losing out is that $50,000 in price and equity that you're gaining on the property. So it's and like I said before, we like to focus on the payment as long as you're comfortable with the payment now. And we don't know what's going to happen with rates. So you always need to be comfortable knowing that, hey, if we end up at a 7% rate, this is the monthly payment. There's no guarantee rates are going to come down. There's no guarantee we'll have an opportunity to refinance. But the likelihood that it could happen is pretty good. So you're just going to be 3-4 steps ahead of the other people that are going to be buying a year from now, a year and a half from now, if rates are lower at 6% or 5.5%.
Yeah.
So it sets you up for even more equity position down the road. So,
Yeah. If I heard your numbers in there, you were saying if the price increased 50,000, so really your down payment went up 5,000 instead of 500. Were you saying 50,000 or did you say 5,000?
I said 5,000. Yes.
Oh, okay. Okay. I misheard you there. I think I was thinking back to your first example. So, but yeah, I mean, all of that is just so spot on. I mean, and I think where people get overwhelmed, it's like, oh man, well, so like, what do I do here? And I think it just comes back to the advice we were given earlier, right, Sean? Where it's just like, if you want to buy a house, then just start one step in front of the other. Meet with a realtor, meet with your favorite lender, and just start talking through, like, what does this look like? What does the market look like? Where do I want to be living? What kind of home? And obviously getting pre-approved and all that. And if all of that is lining up, like, you got to stop trying to time the market. That just that I think that's where people really get wrapped around the axle and unfortunately probably weight themselves into a more expensive opportunity.
Yeah, I completely agree.
So yeah, Sean, I know you've got a couple slides here just in terms of some of the pros and cons. Again, from kind of some of the financial look of these things.
So basically, the kind of pros and cons of there's different properties you can buy, whether it's a single family home or a townhome or a condo. I think a lot of differences are, from a single family, you may have less or no HOA fees compared to, a townhome or a condo, which you're going to have different amenities and different things that are going to be paid by the HOA, which will be included in your monthly dues. So, and I think I never would advise our clients that you need to look at a particular property based off of what it needs to be more about what your needs are and what your goals are. Obviously townhomes and condos might be someone that doesn't want to do yard work, doesn't want to have all the maintenance and all that kind of stuff, compared to someone buying a single family home and doesn't want to have an HOA and wants to paint their house pink or whatever. So but it's from the lending standpoint, there's a few differences, but not enough to justify, hey, I should concentrate on one particular property compared to another. So I think it's just more about what you're comfortable with and really what the type of living that you want to have.
Yeah, that makes sense. So going into credit score, I mean, what should people be thinking in terms of credit score? Is that something that they're going to have to work on for 5 years before they can buy a home, or what would you say around that?
Well, I think what's interesting is a lot of our clients that reach out, they're worried that there's two sides, that they're either super worried about what their credit is, or they're very confident on what their credit is. So, and the great part about our process and everything is that we can do what's called a soft credit pull, which is not a hard credit check against anyone's credit. So we can get a full picture as far as what their credit is, as far as the scores from the three different bureaus, and see where we would kind of be and put a game plan together if the scores are lower, or if they're higher, or whatever it might be. But I think one tidbit to keep in mind is that if you have credit cards, if you can keep those balances relatively below 15 to 20% of whatever your available credit is, that's going to be very helpful as far as having good credit scores. Then obviously making payments on time, that's going to affect your scores as well. So, but a lot of people, I think, a lot of our clients that we initially talk to and do a consultation with, it's just really, sometimes it's just going through their credit report and just kind of getting an idea as far as if they need to do anything, kind of what their situation is, and just kind of give them a baseline.
Yeah, that makes sense. All right, so next, let's talk a little bit more about how to build your team of advisors. Now, obviously, Sean's a lender, I'm a realtor, but those are really just two of the folks that you're going to need along the way. Now, I would definitely, if you have either a realtor you trust or a lender, and it's just one or the other, fine, start with them. If you want to start with a trusted lender, great. Because I guarantee you they're going to have someone that they've connected with, that they've done business with. Sean and I have done business together. We've helped some great clients achieve their goals. And so he's someone that I definitely add as a preferred lender and introduce people to, because I know he's going to do great work for them. So I would start with one of those two as kind of the hub of your realtor team, or I'm sorry, your real estate team. But then going from there, you want to make sure you have a great inspector. There's lots of inspectors out there, but making sure that you've got someone who's really going through the home. They talk about pilots, right? Pilots, when they fly a plane, they literally go through checklists, and your inspector should be doing the same thing, because they're looking through the systems and just every aspect of your home. Now, that doesn't make them perfect or impervious to missing something, but an inspection is really important to just try to find some of those things and make sure that you're not buying a lemon. And so an inspector is a really important one. Insurance agents, hopefully you've already got one, whether it's for your car or your current home, whatever it might be. But having someone that you can trust to give you a good quote, or even if you just want to get pricing from someone else, it's just good to have that person on your team. This next one, Sean, I don't know if you've dealt with contractors. I think all of us have. There's and I think just in any industry, there's some really good folks, and there's some folks that just kind of ruin the reputation for everybody. But this is especially so with contracting.
Well, and I think we're very fortunate and lucky for the experience for both of us being in real estate, that we've experienced we have some really good connections as far as contractors and people that we trust. And then we've been through, we have experience through others too, but at least we know, and we have that good network now. After all these years, and like you said, it's so important to have that good contact for a roofing person or a plumber or anyone that that we feel like we can trust and know is going to take do a great job for our clients too. And for everything. And I know you have awesome inspectors that you work with, and kind of touching on what you had said earlier. I think it's great to have a good team between your realtor, your lender, your inspector, everyone working together. Basically, because we all have the same goal, is to make the home buying experience or the selling experience an enjoyable one, but also a successful one too. And I think it's especially in the market that we're in, right, where it can be competitive, that everyone's on the same page and everyone's working together with that common goal. You're going to want to be able, as a realtor, you're going to want to know that you can reach your lender at 6 o'clock on a Saturday night if if you find something, to run numbers on it, make sure everything looks good and they're comfortable with it. So then you can get an offer in that evening. So, things happen fast. And I think it's important that everyone's working together and you have that good team around you.
Yeah, absolutely. Yeah, and I think another thing with when you are getting a referral from someone, I know for a fact just from experiencing it with one of my main concrete contractors, something happened during that project that I gave to one of my home sellers, and he immediately went and fixed it. Now, I would like to believe that he probably would have done that no matter who it was. But I do think there's something to the fact that he knows. I mean, I've given him multiple referrals. He
Sure.
knows that that's an important relationship for him. And so
Yeah.
he's going to make sure that he does the right thing on every job because he wants to keep getting those referrals, right? And so that's almost actually a more powerful reason to get referrals from someone like Sean or myself that is dealing with these folks, probably more often than the average person.
It's and we're obviously in the real estate business, but we're also, I would say, more in a relationship business,
Yeah.
and have those connections and having those relationships with, it's, and your approach to the business is the same as ours too, is that it's, and, when our clients become friends, right?
Mhm.
And it's not after the closing, we don't just go away. We're always going to be here, and a lot of our clients have become friends that we've had for years that have referred us their friends and family, and that's the beauty of being a referral based realtor or a lender, is that having
Yeah.
all those relationships and all those connections over the years, it's just awesome.
Yeah, absolutely. Yeah. So if you don't want to see our faces after the close, then we're probably not the guys for you.
No, right.
Um, well, yeah, Sean, why don't you touch a little bit on what that pre-approval process looks like, and I'll kind of start you off here in just that.
Yeah.
For anyone who's thinking about getting into the search and all that, I can tell you that that there is real emotion, raw emotion here when you find a house that you really want, but you haven't done the pre-approval process yet. That can be a very emotional experience because you may lose the house because of that. And that's not a lender's fault or anything like that. It's just there's a certain amount of time that you have to go through and certain verifications that have to happen in order to have that pre-approval letter. And that pre-approval letter is absolutely required. If you put in an offer without a pre-approval letter, the seller is essentially going to have to just take a guess as to whether or not you are actually credible to buy this home. So with that with that introduction, I mean, Sean, what does that actually look like?
Yeah, exactly. And it always starts with a conversation. It really, so there's, at least with us, there's no, we try to set up a time, and whether it's, the evening or during the day or on the weekends, whatever's, flexible for our clients, but it starts with a conversation, and kind of getting an idea as far as, where they are financially and what their real goals are as far as, home ownership too. So as far as the application is concerned, it's very general, very easy questions. I tell my clients it's a lot of twos. So, where you've lived for the last couple of years, where your employment, and then I like to work the numbers backwards, kind of what I touched on before, not necessarily what you qualify for, but what you're comfortable with from a monthly payment standpoint.
Mm.
So it starts with gathering that information, and I prefer to do it over the phone, but I know that a lot of our clients are super busy, and it's sometimes more convenient just to do it through our portal online, which is great as well. And then we set up a time to kind of go through any questions, and then I can explain different loan programs and products. And again, we don't pull a hard credit check; it's just a soft credit pull, which still gives us all the information we need in order to do that pre-approval as well.
And Sean, just real quick for folks that don't know the difference between a hard pull and a soft pull, can you elaborate on that?
So a lot of people feel like, I don't want my credit checked, and they don't want to show it as an inquiry on their credit because they feel it's going to affect their credit scores. Sometimes it does, sometimes it doesn't. It just kind of depends on the situation. But we do what's called a soft credit pull, which it's not showing up as an inquiry on their credit. But it still gives us all the information as far as their actual scores with the bureaus, any liabilities or debts that they have as far as like student loans, automobiles. It gives us all the information we need without actually having to show up as a credit check or hard credit check on their credit. So, so a lot more people feel a little bit more comfortable going that route. I think a good example might be is, it's maybe someone has started the process online and they'll go to like a lendingtree.com or something like that and submit an application.
Mm-hmm.
And then by the time that they're referred over to us, I'll pull their credit, whether it's a soft pull or a hard pull, and it'll show, 10 different credit inquiries on their credit from that application that they submitted through LendingTree, which having 10 different companies pull your credit will affect your scores. Having one credit pull, a hard credit check, is not going to affect your scores.
I mean, so, Sean, that I assume comes with a few phone calls as well from all these folks, right?
Oh my gosh, yes, of course. So yeah, I would highly encourage not starting the process online. Getting a contact through your realtor or a family member or a friend as far as a lender. Starting that process online is, I don't think, a very good or a smart way to go about it. So
yeah, for sure. So yeah, on to the under contract process. I mean, there's a lot from the point of getting pre-approved and starting to search to get under contract, and we'll have to do kind of a separate webinar for that whole deal, because
right.
Actually putting together a competitive contract that is going to get accepted in this market. Now, don't get me wrong, it's not 2021, 2022 where every single house has a bidding war, but bidding wars do exist out there, and you're not going to have to necessarily come in 100,000 over asking, but you are going to have to be competitive. And having a good realtor who and lender who know how to structure a great offer in a way that hopefully minimizes what you're gonna have to bring to the table to make it competitive, but just making it really shine versus some of the other offers is super important. So like I said, I mean, we would probably have to spend another half hour on just that topic, but that is something extremely important that you should cover with your realtor and lender before you even go out shopping, because there may be a time crunch, not every time, but there might be a time crunch where you got to move fast. And if you've got to spend time learning what an appraisal gap is, or an escalation clause, or some of these different tools that are in your tool belt to use and be competitive, if you've got to learn those along the way, either it's going to take too long and you're going to be frustrated because you missed out, or you're going to be overwhelmed and feel you're going to feel like kind of overwhelmed in terms of just feeling like, I don't know if I'm ready for this, right? And not sure if you're making the right decision. It's going to feel uncomfortable. So knowing that ahead of time is super important, and you can usually cover that in a buyer consultation. That's what I do with my buyers as we get started, is we sit down, do a buyer's consultation, and really go through the process and what some of those tools in our tool belt are, so that if we do need to pull one out to use that, we can. But once you have been accepted and you're under contract, what does that start to look like from your side, Sean?
So basically, that's when the fun starts. So I always tell my clients, we're going to be best friends for the next 20 to 30 days, depending upon our contract dates. Then we'll be friends after. So, but we try and make the process as enjoyable, because it should be. You're buying a home, and as seamless as possible. So we try and do a lot of the upfront work through the pre-approval, so you can enjoy the process. But also, there's a lot that goes to it, as as far as on your end with the inspection and negotiation and everything too. So, but once we do go under contract, closing times are typically 20 to 30 days. And basically, we get our loan approval, do the appraisal, and I like to, and Jacob, you're very good about this too, but communication, I think, is 90% of our business. And it's interesting because I think 90% of the people in our business don't understand that and don't get it. But I think if if everyone's on the same page and communicates, it's going to be an enjoyable transaction and sale for our clients, and having, like, kind of getting back to what we talked about before, having that good team, and working together, to make it all happen. So
Yeah, absolutely.
you're very good, Jacob. You're very good about, when you do your buyer's consultation before the process even starts, as far as, explaining the market to your clients and your friends, and it kind of giving expectations as far as what to expect. Because I think a lot of people kind of go into it blindly and don't know, and then they get just, shellacked by that first home that, unfortunately, that they love and felt, they love it, and whether they haven't had their pre-approval done, or it's way over their price point or something. I think you're very good with, having those conversations with your clients, and leading them down the right path to be successful, to find something, and for it to work out for everyone.
I really appreciate that, Sean. And I mean, that's why we work so well together, because I know you think the exact same way. You want to make sure, you mentioned communication earlier, and that is just so key. I got to tell you, I know it is so tempting to get on your phone, pull up the Zillow app, and just hit that little button that says tour now. It's just so tempting, because there's nothing more fun when you're starting to think about buying a home. There's nothing more fun than looking at pretty pictures of pretty homes and then going and walking through them and all that. But you will undoubtedly, like, I have zero doubt in this, you will save yourself so much time and effort, and probably emotional anguish, if you will just do a consultation with your realtor, with your lender, and just make sure that you understand the process, that you're prepared. Because the last thing you want to do is fall in love with something, and then either it actually is not a good fit for you financially, or you miss out because of timing, whatever it might be. So yeah, I appreciate you saying all that, Sean. And like I said, I that's why I love working with you on this, because I just, like, I know that we're working towards the same end with the same approach.
Yep, I agree.
So Sean, what are some things that I should be aware of as I get into this loan process?
So I think a lot of, and I always tell my clients very upfront that, transparency is a key for us to have a great relationship. And I think so. If you're starting the loan process, we're doing our pre-approval, let me know if something happens as far as your employment, or if you're thinking about changing jobs, or you maybe need to, there's a situation where you need to get a new car and you might have to take out a new auto loan or something like that. So I think getting back to it, communication and transparency is the key to everything. So, once we start the loan process, not changing jobs or moving money around to different accounts, or taking on any new debt is key. Like I said, I always tell my clients that, hey, it's okay to talk to me and say you're thinking about maybe trying to get a new job or trying to get a promotion. Let me, stay in touch and let me know, so then we can plan accordingly, so we don't put yourself in a bad situation. I think a good example would be, a lot of our clients, maybe they start off and they're working for a company and they're a W-2 salary person, but they have an opportunity to go off on their own and maybe be a consultant. Well, a lot of people don't know, and they may be making a lot more money going that route, but what a lot of people don't know is now they're self-employed. So there's different rules and guidelines compared to when you're working from someone to being self-employed. So it's those types of things that I encourage my clients to just stay in touch and let me know anything that's going to be going on as far as financially down the road.
Yeah. I had a seller that we listed his home. We got a buyer to put a offer in. We accepted the offer. Lender checked out on everything, said, yeah, everything's looking good. And then I get a call as we're kind of in the process. I get a call from this this buyer's lender, who I had just met, and all that. Kind of a disconnected relationship there. But yeah, she calls me up and she says, I've got really bad news here. I said, that, that's not what I want to hear. And she tells me that the buyer had gone out and purchased multiple timeshares within this process of buying a home and had not told her. So not only did he not like disclose that and try to get some advice on like, hey, am I putting myself in a bad situation or anything? Like just flat out did it and did not disclose it. And so we actually had to change our closing date. I don't know how she did it, but she somehow pulled a miracle out of, somewhere and was able to like get this all back on track. But that was a serious, serious risk to losing the whole deal and that buyer's earnest money. So that's where you don't want to get yourself in that kind of trouble. Your realtor and your lender, they have got to be trusted. And I really emphasize that word, trusted advisors that you are going to talk to about everything so that they can look out for your best interests.
Yeah, that's why we're here. That's our job. That's what we're supposed to do. So, and it's great that things do work out, but sometimes they don't, and you just don't want to put yourself in that situation.
Yeah. Again, that emotional stress can be avoided. And so let's talk through. We're getting towards the end here to wrap up. Like how do we put together this home buying plan? And you're going to start with, we talked about who's on your team, right? Your realtor, your lender, your insurance agent, inspector, contractor. I mean, in some cases, you are looking at a home that maybe has a little bit of a structural issue, and you want to know, like, is this a big issue, a small issue? We've got the contacts, structural engineers, all these different folks that can come by, testing for mold. I mean, there's so many different things that they don't always come up, but when they do, man, especially if you are in the transaction, you want someone that you can trust and that is going to be looking out for your best interests. So that's super important. Sean, getting into what is your budget? There's probably an obvious aspect to that, but how would you explain that a little bit further?
So like I said before, it's more about what you're comfortable with for a monthly payment. So that's almost basically the first question I always ask, because there's a difference between what you qualify for and what you can afford. And I want my clients to still be able to go out to dinner on Saturdays, Friday, Saturday nights, and go on vacations and do the fun things. And rather than just working to pay for your mortgage, because that's not fun. So so I think that's super important. And there are a lot of times where my clients may come to me and say, I'm comfortable paying $3,000 a month in a total housing expense, and then they'll find the perfect home, and we'll run the numbers, and that number comes in at $4,000 a month. At that point, we have to have a serious conversation as far as, hey, you qualify for this amount, but you initially told me at the beginning that you really want to stay at this amount. So is it worth it to you? Can you make some life sacrifices as far as to make this work? Or should we really just kind of pass on this and try and find something more in your budget that you're going to be comfortable with? So so those are the conversations that we have, at the very beginning of the process. And then obviously when you start house hunting and find something with Jacob too. So.
Yeah. And that's, I think that dovetails into, as far as like a buyer's consultation and just some of the things that you really must do before you buy. You just talked about like pre-approval, making sure that you understand not just what you're approved for, but where you really are comfortable. Like, do you want to be able to, like you said, go on vacations and all that? It's super important to be that everyone's on the same page with that. And speaking of being on the same page, one of the best exercises that buyers can do even before all of this is to sit down and decide what are the 5 most important things to me in terms of when I want to buy a home. What are the 5 most important aspects of that? That could be defining the location, your budget, the size of the home, amenities that you really want to have. And just start listing them all out. If you come up with 20, that's great. But then start to develop what are your top 5. And if you have another decision maker in this, whether that's a spouse or whoever, do it separately and then come together and figure out what your top 5 are together. And the reason this is so important is that, like I said, this can be an emotional process. And when you're walking through these homes, it is really easy to fall in love. right? And when you can almost kind of check yourself, check your emotions with that list that you made when you were of sound mind and not
Yeah.
not feeling in love with this home. It's just it helps that much more, because either it checks the box, you say yes, this really is checking all the boxes for us, or you say, that's right, like I have to have a 2-car garage and this one only has 1 car. Like, this one's really, really good, but let's think through it more. Like those kinds of preparations are going to help you in the long run.
Yeah, I love the fact that you ask your clients if you have a husband and a wife, that you ask them to do them separately, so then you can figure out what's important to each other rather than important to together. So
Yeah.
I think that's awesome. That's great. That's a great way to go about it for sure.
Yeah, and I think it makes for some interesting conversations.
I was just gonna say that kind of puts you in a weird spot too. I'm more of a therapist, and I know on the real estate side you do so much. Your value is way above and beyond the real estate side, and I know you're also a therapist too.
Yeah, I joke with my wife because she's a hairdresser, and hairdressers are often called therapists as well. I'm like, we're actually both we both have like this side gig of being therapists. So
Exactly.
yeah, it's fun, some of the stories that we get to come home with and trade with each other. But um, this last one, just establishing good routines of reviewing homes. I think a lot of people just think like, well, I'll go look at this one, or I'll go look at these 10. And it's just you want to establish a really good routine and understand like what's going to be the most effective for you. Here in the Denver area, in peak season, a lot of times new listings are hitting the market on a Thursday, and if they're a really popular one, they're going to be under contract by maybe Sunday, Monday, somewhere in there. So Thursday is a big day to be looking for new inventory. And knowing that is really important, because it can help you set up, those showings that you can go look at. Don't get me wrong, it's fine to go look at one house, but if you can, try to look at 2 or 3. Our brains, they love to compare and contrast, everything, and homes are no different, right? So try to get to 2 or 3. Try not to see more than 5, because you're probably just going to get to that point where your brain starts conflating everything, right? It's like, okay, was that the one that had that kitchen, or that one had that fenced yard, or whatever it might be. So I think the sweet spot is at least 2. If you can, no more than 4. I mean, sometimes I've got some folks that are moving in from out of state, and sometimes they'll actually fly in and do some showings. In those cases, we have to make do. But yeah, those are some things that I would really work on, and just make sure you have a good routine. Honestly, a weekly routine when you're in the buying process with your realtor, and just some good conversations as you're going with the lender as well, because they want to be kept up to speed. And if you're getting more serious about a property, letting the lender know so they can start to run some of those numbers and see, like, is this one that can be a reality? Because I mean, Sean, you probably have some of those instances where maybe that wasn't brought up early enough, and you have to deliver bad news.
Yeah, exactly. And we don't like delivering bad news,
No,
Jake. You know that, and
that's not our favorite part of the job.
no, and I know through the clients that we've been able to help together that the feedback that they always say about you, which, so I need to put you on the spotlight here because you're great. You listen to your clients, and I think that as you're going through properties, you're listening to what your clients are saying, that and figuring out and listening to what's important to them and what's not important, which I know a lot of agents don't actually do that, unfortunately. And there's great agents out there, don't
There
get me wrong,
are, absolutely.
but there's great agents out there. But I think listening and kind of trying to decipher what's important, what's not important, because it's going to be very hard if you have 10 key points as far as what like the client and a friend's looking for. It's going to be very hard to hit on all 10.
Yeah.
But you'll be able to listen and understand, okay, it's the kitchen that really matters to our clients. This is what I'm hearing, and what you can focus on, and also you're really good about being able to see past if a house needs to be updated, what sort of improvements, whether they're small or large, as far as what they could potentially do, and see that potential in a house too. You're very good about doing that too.
Well,
So
thank you, Sean. I knew I invited you here for a good reason. That was to I
no, it's true, and
appreciate that.
it's not just about showing a house and getting access to a house. It's so much
Right.
more than that on your end. So and it's important.
Yeah, it absolutely is. And I mean, I think I'd be missing a big opportunity to help people if I didn't say the same about you, Sean. I mean, there's just there's a lot of great lenders out there, and I think if you've got one that you've got a great connection to, whether it's a realtor or a lender, I mean, you want to go with someone that you can really trust and is super knowledgeable and brings these different aspects of not just like the direct knowledge, but some of those side things that you mentioned, Sean. And I mean, again, you are such a good person with that in terms of just being able to kind of look outside of just the numbers, right? And really helping people try to make wise decisions. None of it, I mean, you and I, we can't make decisions for people, but we can provide really good information that helps making those decisions a bit easier, right? And that's what I think we really pride ourselves on is kind of guiding people in that way. So
Yeah, and just being a resource for a
yeah,
client too. It's just I love it when a past client reaches out and says, "Hey, look, I need a plumber, or I need a
yeah,
my insurance seems like it's going up. Should I reach out to another insurance agent?" And I love when they know that they can call us about other things other than just a mortgage. And
yeah,
I know you feel the same way too. It's about that relationship and about them always knowing that we got their back.
yeah.
So,
Yeah, and I mean, let's be honest. Like, it just feels good to share those with others when you've kind of got that resource and everything. Like all of us, whether you're a realtor, lender, or an engineer or whoever, like it's fun having those
yeah,
because you're helping, and I think at the base of it, all of us want to help. So
yeah,
um, yeah. So, I mean, if you are thinking about buying, you're getting into the home buying thought process, all of that, I would highly encourage you to go talk to Sean. He is amazing. He is not high pressure. If you can't tell from the last, 40 minutes or so that we've been talking, Sean's amazing. He's easy to work with. He's super knowledgeable. He's been doing it a long time. And yeah, he's not going to steer you wrong here. He's got so many great resources at his fingertips. And even if you're just like, I just want to have an initial conversation without obligation, like this is your guy. And I would feel pretty confident that if you do that, you're probably going to want to work with him. But yeah, I would highly encourage that next step. And then, yeah, I would invite you to give me a call as well. Let's sit down, do a buyer's consultation, and really just talk through like what is the market looking like, and not just the market overall. This is, in this webinar, that's what we covered was kind of the Denver metro area. But let's dig into that city, that suburb, even that neighborhood that you're looking at, and let's really see what are things looking like, how quickly are things going off the markets, and really let's just try to create a plan that works for you. If we sit down and the plan is you need to wait a year, that's great, because
yeah,
now you have some definition, some clarity to it. And if it's we got to get moving now because lease is up in a month or whatever, that's fine too. We just want to, like Sean said, be that resource and help you make that plan so that you can just rest a little bit easier knowing like I have a plan. I know what my next steps are, and I've
yeah,
got people in my corner that are going to help me do it.
yeah. I completely agree. That's and we're going to be here for a long time. So it's
Yeah.
whether it's 6 months from now, a year from now, 10 years from now, having a baseline, having a game plan, and just having those answers, it's important.
Yeah, absolutely.
Yeah.
Well, Sean, I
All
really
right.
appreciate your time and jumping on, all your expertise.
Yeah,
It's always fun working with you, and yeah, I hope we have helped a few people here.
absolutely. Thanks, Jacob.
All right,
Take
take
care,
care.
everyone.